Hello YouTube. This is a portfolio update. It's going to be a quick one. Just wanted to share with you what I've done with my portfolio towards the end of the year. So one thing I've been talking about is trying to concentrate and basically I have to do some soul searching and go through each of my pies and just understand what I really want from that pie. Um, and which led me to basically just sell off a lot of the stocks I have and reinvest it in one particular stock, right? So today my portfolio is valued at just over 23,000. Um, I've been selling and been investing quite a few stocks, and that's brought my portfolio, my amount invested, from around 18,000 to close to 21,000, which is pretty good. I so far I have a return of £2,234, which is about just over 10% up. So obviously I've come down quite a bit since the news time was about almost 17%. But it was expected as a sell-off going on. There's a shift into recovery stocks, but at the same time, here in the UK, the lockdown, basically the whole country is pretty. No matter what, just lock down the whole country. To be honest with you, um, so yeah, so I used to have four active pies. One was dividend growth, one was dividend income, and then I had the growth and speculation. So basically, I've merged the dividend growth and dividend income one together. Actually, before I show this, I might as well just show the number of stocks I have now. So I have 23 investments. So this is quite a long. Um, so I've come from 105, 110 investments to 23 investments, and I'm pretty comfortable with them. So that sometimes tells you, your investment is just it's literally just bloated. I literally just had to think about what exactly do I want, and I basically thought to myself, okay, I'll go for the best, or what I consider to be the best in that category, and then just add a few more, but focus on just those best ones. So for dividends, dividend income, obviously I focus on GSK. They have a pretty good yield. Pretty much at the bottom of their cycle right now. I believe it's just a cyclical thing. I think eventually possibly when the economy kicks off, GSK will be one of those stocks as well that do kick off. So I'm playing that's my recovery play, GSK. Um, then Avon Rubber, so that's another UK company. So this is my dividend growth play. They have a dividend growth of about on average, I think over the last 5 years of about 30%. So all the other stocks I had, they had dividend growth as well, but they were not really in the double digits. You know, scene. So they were more single digit growth. So 30%. I don't know how long they're gonna keep on going at 30% dividend growth. Obviously, Avon Rubber had a drop recently. So yeah, just decided to just sell most of those stocks and just invest them in. So I haven't sold some at a loss basically. I just wanted to get it done and dusted. That's a big loss, more like £5, £10. So I'm not too worried about that because over the long term, I believe I'm gonna make that back either through dividends or through capital appreciation or through share price appreciation. Next one is sentiment. Obviously, that's my gold play. Then Legal in General. Obviously, these have pretty good yields as well. Legal in General, insurance play, rotating income, my monthly payment play. Um, BP oil play. I like BP. BP they've really invested a lot in in the EV charging and renewable energy scene. So and everyone's saying really oil and gas is not really it's not dead, mate. I mean I don't want to call it third world countries, but third world countries aren't gonna go into a lot of places that's still gonna use petrol and diesel, and a lot of products basically use oil-based products, or oil-based extracts or whatever. So the oil industry is not really dead, and I think BP are really really like pushing to get into this whole charging space, and yeah, so I think BP is a good play. It's a good recovery play. Um, And obviously, we're saying we're moving into hydrogen, but they still need the thing. BP have the infrastructure in place, so they're still going to be the ones that have to sell the thing in the first place. It's not. I don't think anything's going to change too much. You just potentially, instead of just putting oil and gas, you might just use an electric charging station, which will be in the BP station, or you would use I don't know, hydrogen supply tank or whatever. I don't know. So yeah, I think BP is gonna be okay. Um, you got Harmer, then you got Johnson, Marty. That's kind of my um because it's a materials company, isn't it? But I think that they supply a lot of the materials that like companies like ITM and Series Power use, I believe. So it's just my kind of indirect play towards those companies or towards that industry. Skywork Solutions, my chip play. Don't really know where chips are going. To be honest with you, I would prefer to have Taiwan Semiconductor, but can't have that within my ISA. Um, you know, Intel's basically. I feel like Intel needs to change their business strategy. AMD is basically overvalued. Apple and Microsoft I hold elsewhere because Microsoft are talking about making their own chips as well. Apple have started making their own chips as well. Yeah, so I just feel like Intel is kind of becoming a bit redundant, to be honest. AMD obviously to me it's really overvalued. So my cheap play would be Skywalk Semiconductors and Skywalk Solutions rather. Yeah. Yeah. So that's pretty good. Obviously, yeah. So I've got £10 in £10,000 in dividends now. So which is just quite a lot actually. But it gives me a perspective as to what I have in my portfolio, and this is pretty bang on in terms of what I'll be expecting. Especially now that I feel like there might be a switch from growth into dividends, or into value plays at some point next year. Growth, Tattoo Chef, PayPal. So yeah, most of my money's in Tattoo Chef. I would like to put more money in PayPal. Hopefully, it drops a bit more. Just gonna wait. Upwork got some money in that. Amazon, like to put some more money in that as well. Tesla, yeah, I'm okay with that for now. Roku, Salesforce, Fastly, Twilio, Alibaba. Alibaba is one of those. If for some reason I'll take away Alibaba, um, yeah, I'll just take it away. I'll probably just put it in Amazon or something, or maybe put it in Shopify. Shopify drops, or PayPal. Yeah, but I'm in a loss right now, so I'm not afraid of taking losses, to be honest with you. But I feel like Alibaba is one of those that's going to recover. So why take a 62 pound loss? So yeah, that's it for the growth stock speculation. Added a couple of holdings here. So Open Dot Technologies. Um, it's basically as simple as I feel like this is gonna grow. I compared it to Zelo Group, which does something very similar to Open Door. And from a market point of view, I think Zelo is basically 10 times more, as a market cap 10 times more than Open Door. So, you know, and Open Door basically has been said to be, a better company at the time. And also the technology is better, they're vertically integrated, and I believe they actually generate better revenues than Zelo. I might be wrong on that one. But yeah, so just kind of, I think that's just a no-brainer for me. Open Door Tech, they dipped quite a bit, about I don't know, a couple of percent. So got some of that. Airbnb obviously jumped into that as well. Long-term play. They're basically the only ones that are doing. They're basically the top of the game, basically in terms of what they do. And yeah, I think it's gonna be okay. I think that's a good spec play. And obviously, Dropbox is still there. Don't really know what to do with Dropbox. If it does drop a bit more, I'm still gonna slowly put money into it and just see where it goes. I still think it's a good company and has good potential. So yeah, that's it, guys. I guess I'll just show you. Yeah, obviously I've been busy today buying and selling. The one company I believe I probably shouldn't have sold was BAE Systems. Um, yeah, I think I should have sold that one, but it's done now. So I'm just gonna continue with life. Yeah, I feel like I should have kept BAE Systems. That's a good company to hold. I'll just focus on dividends. Yeah, I sold bats as well because bats. Yeah, I think it's a dividend trap. Bats is one of those dividend. I think BAT is a dividend trap. I just don't see a future for it. I don't know why. Just couldn't. So I just sold it. I think I went at a little bit of a loss to be honest. Yeah, yeah, 47 pence. It's nothing. Yeah, so right now, overall, total return for the year, cash wise, well, not cash wise because I've reinvested it, is 1,500. Dividends, I've got 1,110 this year, which is pretty good. That's all been reinvested as well. And for the ISA, just a quick one for the ISA. So basically, I've FOMO basically, but FOMO for a good reason. So the FOMO for I've joined the Alpine 4 Technologies. It's just basically on the fact that they will be listed on the Nasdaq, so which will draw more attention to the stock and hopefully drive it a lot higher. And I looked at the balance sheets and looked at the company. It's actually not a bad company. It's got a future. Um, yeah, I just don't. I'm not too. I don't have a lot of knowledge on that industry, but just looking at the company itself, it looks like it's got some prospects. So decided to go into it. Arco blockchain, obviously, that's my cryptocurrency play. It's gone up quite a lot actually. Yeah, yeah. So it dipped a bit, so I bought a bit more. I bought some actually, so I didn't buy a lot. Just kind of helped. Just kind of bought enough to keep me enticed. If it drops a bit more, then I'll buy some more. They also want to get listed on the Nasdaq as well. So yeah, yeah. So is it on the Nasdaq? I think, or the US OTC. I'm not too sure. So hopefully that will give them some more attention as well, because I think the American market just does better than everywhere else. Um, yeah. So Beam Global, you know about that one. CIG, you know about that. I took some profits in Beam again, but it just keeps on going up. It's come back down a bit. New technologies, long term hold, long view acquisition. That seems like that's to me is like the only solid SPAC I can think of. Plug Power dropped a bit, so got some more money in there. CO Gen Therapies sold a bit to invest in, I think, Argo blockchain. So yeah, that's that. The history. So finally for this year, I've got a total return of 3,368. Some of those I've taken out of the account. Some of them I've some of that majority of it I've actually taken out. Some of it I've basically reinvested. And for dividends, £14 for the year. So yeah, that's not bad as well. So yeah, that's it, guys. Thanks for watching and Happy New Year in advance, I guess. And yeah, so obviously, if you want to join Freetrade, there's gonna be a link in the description, and also in the I think in the first comment I'll pin something down. You can subscribe, you can register if you want to, or or wait till the market crashes or whatever. Well, my strategy is even though the market crashes, I will buy in March or April. Actually, in April, if it does crash. If it doesn't crash, if there's a rotation, then I would expect my dividends to basically capture some of that rotation and hopefully balance things out. So all in all, I'm okay with it. I think what would really upset me is if it did crash, and these crashed a lot as well. Because I'll be telling my Sasha just taking profits, because these are just, kind of swing trades essentially. Yeah, for now. All right, that's it. All right, take care, guys. All right, bye.